HCL Tech is all set to announce its Q3 earnings today. The IT major is expected to post revenue growth driven by strong performance in software and products and platforms. Rucha joins us with more details.
HCL Technologies will report its third quarter results today. Well, these are the expectations. Revenue expected to rise by 4.1%. EBIT margin expected at 19.5% versus 18.6% last quarter. Net profit expected to rise by about 9% to 4,613 crore rupees. Well, the key margin levers could potentially be Project Maximus subcontracting cost optimization, but on the negative side, margin may also get impacted due to wage hikes and expected furloughs in the third quarter. Remember that IT companies have lower number of working days in the third quarter and hence expected furloughs over here. Key highlights are that the third quarter is seasonally strong for HCL Technologies largely because of its products and platform business. It has also recently acquired the communications technology asset. Well, in terms of FY25 guidance, the constant currency revenue growth guidance currently is at about 3.5 to 5%, and this is expected to rise in order to account for this kind of acquisition of communications technology. Well, the operating margin guidance for FY25 is currently at 18 to 19%. So key things to watch out for will definitely be this guidance, whether they are maintaining, upgrading or downgrading this kind of guidance, and also the growth in the product and platforms business. We'll get to know more about the results post market today, and also an earnings conference call to be held today at 7:30 p.m.
Well, thank you, Rucha, for that. HCL will definitely be a watch. And keeping it with Q3, Suntech Realty and Grow Capital has released their Q3 business update. Anushi joins us now with more on this.
Hey, so a mixed set of results is what we are looking in terms of the business updates of both of these companies. First, I'll start off with Suntech Realty. Now, they've recorded a 39.6% of a growth in their pre-sales number, with their number standing at 635 crore, while this continues to remain on a healthier trajectory, taking their 9-month FY25 figure to 1,661 crore, which again is a 34.2% of a jump. It's the collections that is now going to be a concern for the business. If you look at the collections for the third quarter, they saw about a 23.2% of a dip, with the number standing at 336 crore, while the collections for the 9-month figure stood 945, which is similar to the 940 crore of a figure that they reported last year. So while the pre-sales number continues to remain in line with the guidance of 30 to 35%, for FY25, it's the pickup in the collections, something that we should anticipate going forward for the business, and how that is, how the management comments on it is something that we need to watch out for. The second one on the list is Grow Capital. Now here the AUM has seen about a 32.1% of a jump on a YOY basis to 11,050 crore, while their micro enterprises secured loans disbursement stood at 500 crore versus 180 crore. So big jump that we are looking at in terms of this numbers, taking the contribution to the AUM also to 12% versus 8% last year. If you see the SME branches added, we saw about 74 additions in the 9-month period, while the net loans originated stood at rupees 2,050 crore versus 1,971 crore in the second quarter of this financial year. So overall, a healthy set of numbers that we are looking for Grow Capital. But on Suntech, collections is something that we should definitely be having a track on.